From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, October 1st, or if you're listening in from Capitol Hill, it may still be Thursday, September 30th, and we'll get to that in a minute. But I'm your host today, Bryan. You're listening to the HPS Macrocast, and I'm subbing in for Tony Fratto, but joining our good friends every week, John Fagan and Brendan Walsh from Market Policy Partners. Guys, it's been a crazy long week and one that seems to maybe not be ending anytime soon, especially if you're following what's going on Capitol Hill. So I want to get into a lot of that. There was also a lot of news on the Fed this week, a lot of heated action between Congress and the Fed as well. So just kind of starting with the latest on the Hill, lot happening very late last night. We do have a deal to keep the government open for a few more weeks. We'll get there to December. We still don't have a deal on infrastructure. We still don't have a deal on the budget resolution. And perhaps more importantly for our audiences, big questions around the debt ceiling still. But I would say from my vantage point, you've got some progress. You got Biden. I hate to say it this way, but it's a little true. You got Biden off the sidelines. Him and his administration spent a lot of time on the Hill this week. It seems like Congress is going to continue today to try to get a vote, at least on the infrastructure package, including some type of agreement around a framework on the budget resolution. I joked that it's still Thursday on Capitol Hill. Pelosi has kept the legislative day going, which is a fun little trick of Congress. And folks can still declare victory that they got their Thursday vote if she ends up doing it before we publish today. But we got a number from Manchin, 1.5 trillion, that seems to be floating out there. It seems like the progressives are really trying to come to grasp with what's there and what they can do next. But let me get your thoughts. I want to kind of hear from you guys. I think Wall Street's not quite getting the answers it's looking for and a little bit more of a waiting game. How's that going to play out?
Yeah, thanks, Bryan. It really is. All this has been playing out against the backdrop of pretty choppy financial markets. September hasn't been the greatest month. It's certainly not only because of the uncertainty on Capitol Hill, but the high degree of policy policy uncertainty and opacity that investors are dealing with. Certainly, it's a major factor. And so, you can't lay it all on worries about the debt ceiling or concerns about the infrastructure bill not being passed. Right. But there's certainly a fair amount of consternation in financial markets. That said, the S&P 500 isn't even 5% off of record highs. So this is hardly a conflagration of your 401k. Right. So keeping things in perspective, Wall Street is definitely very watchful. Certainly in the kicking off making sure that the government doesn't shut down is a very small and minor win, but certainly shows that there is, that minds are focused and that they're able to get some, progressive, incremental progress on certain fronts. Certainly the media could characterize a reconciliation bill that is pared down to $2 trillion as a loss for Biden and the progressive caucus. And I think that sort of shows how far
the loss I'd tell everyone to take
veered off the road of, standard fiscal, standard sort of fiscal frameworks here. These are still really huge numbers. And when we step back and look at it, our expectation remains that the Democrats ultimately look over the abyss, as they so often do, and say, right, well, there's lots of unpalatable and challenging compromises to be made, but they simply have to be made, or we deliver the midterms to the Republicans on a silver platter. And I think that's really the stark choice. And the debt ceiling, you can see it when Wall Street typically is the sort of boy that, they see the debt ceiling as a sort of boy that cried wolf. But when it's mixed up with all this other uncertainty and the particularly vituperative and dense partisan warfare on Capitol Hill, the real brinksmanship that we've seen, the risks are considered higher. But it's still basically the assumption that whether it goes into the infrastructure reconciliation bill
right,
or a standalone reconciliation bill on its own, it's got to get lifted, so it's gonna get done.
Yeah, I think you're right. I mean, I two kind of competing thoughts, but we could have another week or so, or a couple weeks of heartburn, especially around the debt ceiling and especially around these bills. But to your last point, we could be sitting here in a month, Biden taking a victory lap on probably close to 2.5 trillion in spending in terms of both infrastructure and kind of that human capital infrastructure he wants to do, plus a debt ceiling, plus the government open. So the media, I think you're spot on. I mean, we get hung up on votes on Thursday. It didn't happen. It's a big failure. And, debt ceiling didn't pass this week, but Democrats have a couple options. They're not easy options on the debt ceiling. And I do think, unfortunately, politics are getting in the way where Republicans are really only being asked not even to vote for it. Just don't filibuster it. We can get this done. But you're going to see, I think, that back and forth throughout next week and perhaps longer. So we'll see how.
I saw some commentary somewhere saying that this is it's probably too risky a maneuver, but if there are no other options and the Democrats are backed into a corner, what do you think about the possibility that the filibuster would get suspended for a debt limit vote? That's, if there were no other option to have Manchin, Sinema, and the other sort of filibuster defenders put their concerns about it on the shelf and have a carve out.
Yeah, I think it's not being talked about a lot, but I think it is a very viable option. I don't want to speculate too much. I think we would have to be where we were several years ago, like on the brink of default to really get them to move there. But historically, this is what is happening with the filibuster, right? It is slowly being watered down, whether it's for judicial nominees, and now debt ceiling seems like another very strong example, in my opinion, but I think in almost everyone's opinion, of something the government has to do, shouldn't involve a partisan fight, should be able to be one of those exceptions that gets us to 50. And I'm picking up from Democrats that reconciliation, which is an option, you can do a budget reconciliation bill for the debt ceiling once a year. And that is what McConnell seems to be pushing Schumer to do. But that's a little messy. That could take weeks. That my understanding of it, again, is that it is not a suspension of the debt ceiling, which we had last time. They would actually have to pick a number, right? And so we'd be back in this situation again, unless I read something funny this morning. We could pick a 10 Googleplex dollars and hope we never hit the thing. But
I know, yeah, right at this rate. Just kidding. Yeah. What about this? It's worth a mention. Probably not a whole conversation, but the idea of minting the $1 trillion coin for the Treasury and with one fell swoop, cutting the deficit. It
is. It's picking up traction. This was just a few years ago a really pie in the sky idea. We probably would have laughed it off on this podcast, but you're seeing some very serious economists now sort of weigh in on it. It actually, I think, works. the way they've described it, right? So I think it is real. Politically speaking, I can't imagine Biden would ever go for something like that. I think that is one of those cases of it may be good medicine, but you can guarantee you're not going to be in power, next year and certainly not in 2 years.
Yeah, it's even if it sort of works on paper, there are the questions about what would it really do to financial markets? And that is unknowable with something this unprecedented. And you can't go into the Treasury Secretary's office and with anything like high confidence and say, this will not tank the dollar. It won't do anything to Treasury markets. And this and on this kind of policy, as having been in the room at the Treasury for decisions not like these, but other decisions, they're looking for, from the key principles are looking for conviction from the staff. Give me a high probability set of outcomes that I can anticipate. And I don't think anybody has the ability to do that with something as novel as the $1 trillion coin.
Yeah, I think you're absolutely right. Before we wrap up here, I do want to just get some more thoughts from you. I think we now do have a ceiling, and you guys may disagree, feel free, of 1.5 trillion on the budget reconciliation package. And I'm curious, that's a $2 trillion drop. I think that's going to be spun, as you said, in the media a little bit as a Biden loss, but I think politically there'll be a lot there to both campaign on. But I'm more curious on the economic side of things in terms of markets. Will they see that as a big loss? Do you think they will react negatively to a number that may even go lower than that?
I don't think so. I think that is. I think that markets right now are responding not to downgraded headline numbers of the total size of the program, but responding to the overall uncertainty of the black and white, yes or no. Are they, right. There's a non-zero and meaningful probability that the Democrats form a circular firing squad here and and basically get absolutely nothing over the line and descend into a disastrous inter-party conflict. So that is, and that obviously would have negative consequences. With something like the lower headline number, certainly that would come with some things that Wall Street would favor, which is it would presumably come with fewer pay-fors. Right. And so the tax offsets, the bigger the bill, the bigger the tax offsets. And so, I think that it would be in some ways a wash. It would also be what they're cutting. Some of the presumably with Senator Manchin and Sinema taking the reins of this negotiation and putting in the things that they want, those tend to hew toward the physical infrastructure, which is more likely to be, or at least directly impactful of particular stocks and the economy in a way that Wall Street favors, rather than some of the social infrastructure that's a little bit harder for Wall Street, the denizens of Wall Street, to monetize. Right. And so I think that getting the bill done even at a lower level, alongside gentler pay-fors, is perfectly a very Goldilocks. They're not too hot, not too cold outcome for financial markets.
Yeah, it's interesting to hear you say that. That's sort of what I was, what my gut was telling me a little bit, because we haven't talked much about the tax side of things, but in the last few weeks, you have seen Democrats, last few months even, between capital gains tax, between the corporate tax rate, they were putting together, their long-term wish list of higher taxation and corporate taxation and billionaire taxation, whatever you want to call it. And you're absolutely right. I think now with this Goldilocks approach, you don't have to get so high to hit that 1.5 number, where I imagine that brings some relief to markets and corporate America.
Though
And-
I
and
would
I
say
also-
from an economic standpoint, it's basically irrelevant. You're talking about $150 billion a year because this is over 10 years.
10 years. That's a good point. Yep.
So it just doesn't really move the needle. This is not the great, New Deal. This is basically just a normal amount of spending. Also, a lot of it's going to be on infrastructure, which takes a long time to do. From the Democratic standpoint, politically, I would be a little worried. It's a huge disappointment. You're really running on $150 billion a year, and you didn't include any of the social spending. So I mean, it's a kind of a big win for the Republicans, in my opinion.
Yeah, I mean, we could do a whole nother show on this, but politically, there has been so much discussion on numbers, really so little on what we're talking about. And what's, I think, a little bit under the radar, especially on the climate side of things, is, all right, if you drop from 3.5 to 1.5, how much are we losing on some of those?
That $2 trillion is entirely social spending that all got cut out of this bill. Everything else is, we're going to build some stuff, which is fine. We need to do it. But it's not a progressive social bill. This is really just tacking on to the bipartisan infrastructure bill.
Yeah, and can you even get Manchin and Sinema on board on some of those things? You've got a senator from a state that cares a lot about climate risks, and you've got a senator from a state that cares a lot about some of our, coal and other issues that West Virginia cares about.
Yeah, the classic formulation of with Democrats like these, who needs Republicans, right? But anyway, I want to harken back to something that you said before, Bryan, in a previous show, which was the big social. This is in front of the American Families Plan, which is still waiting in the wings, actually, which is the big social program. A lot of the stuff that doesn't make it into this bill will migrate over into the American Families Plan, which is another multi-trillion, but strictly social focus. And that is something that I remember you characterizing it and saying this is an enticement ahead of the midterm elections in November 2022. Yeah. And this is going to be all of these social programs, to the extent that they're not passed in this reconciliation bill, are going to migrate onto that American Families Plan platform. And that is going to be the vote Democrat in the fall. And here's what you get. And, that is that seems to be the game plan. And that seems very more likely by the day. So
yeah,
good call on that one.
Well, I'm glad I said that then, because that's where I am now. So good to be consistent. But I think you're right, because whatever happens in the next few weeks, like this is it, right? We're probably done legislatively. And we'll have to come back on the show to talk more about what Biden will do administratively and from an executive power vantage point in 22, but you're not going to see Congress do much more. And whatever is left over has to become part of that rallying cry to vote for Democrats to keep their majorities in 22. Great. Let's take a break there. I know I could do Congress all day, but I actually really want to get into kind of the other big storylines in Congress this week, which was Powell and Yellen up on the Hill, and a lot of action there between Elizabeth Warren and others. So let's take a quick break. You're listening to the Macrocast. I'm your host, Bryan DeAngelis, with John Fagan and Brendan Walsh, as always, and we'll be right back.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter at marketspolicy.
And we're back with the HPS Macrocast. Bryan DeAngelis here from Hamilton Place Strategies with John Fagan and Brendan Walsh of Market Policy Partners. Guys, I want to talk a little bit about a lot of Fed news this week. Monday seems like a lifetime ago, but we saw two Fed presidents, whatever you want to call it, resign, announce early retirements, speed up their retirements. But Rosengren in Boston and Kaplan in Texas, Dallas, both announced their resignations following kind of reports from the Journal and others about their ethics rules, potential violations, I should say, related to trading stocks and investments throughout 2020. No coincidence to me. It came a day before Powell was on the Hill. But a little bit of a pretty big shakeup, I would say, in the Fed president world. So I'd love to get your take of what this means, knowing we have a lot of other decisions coming up for Biden and Powell and others around the Fed makeup.
Yeah, so we've been out of consensus, having a longstanding call that Chair Powell would not be renominated and that the position would go to Governor Brainerd. And this is obviously a close call, right? Our view really is based on the idea that increasingly there's a sense that the Fed is being dragged, and this was more overt under the Trump administration, but being dragged into the political arena. And certainly with some of the appointments that the Trump administration did and his posture toward the Fed, there was always this sense of, you want your people there to have your back when, and the Fed is, of course, supposed to be independent and above all this. But, let's face it, it's Washington, D.C., and that's increasingly the lens with which everything is seen.
Everything, right? You're seeing the Supreme Court have this same exact debate in many of the same ways.
And so there was a lot of inertia and certainly the consensus. And Chair Powell has done a great job. And in a lot of ways, I think a lot of people laud his performance and his tenure. But at the end of the day, we think that, we've always thought that the argument to have a more philosophically aligned Fed chair and the Biden administration having the opportunity to achieve that is something that an opportunity they wouldn't miss. And Brainerd is someone who has, her name has come up in so many different positions, and she has not gotten them. She was Treasury Secretary in everyone's mind under a President Clinton, and she was supposed to be that she was top of the list before Janet Yellen was named. And so there's a sense that, she's kind of due. And then, you have a lot of other, that was even before the issues with stock trading, which we really think has dented his chances further. Senator Warren coming out in such a forceful fashion, I think is sending a real message. I always try to say Professor Warren because that's how I
right. Nice.
Senator Warren.
Yeah.
She with her policy and her postures in public, she uses Kentucky windage, right? If she's trying to hit the target, but she knows the wind is blowing the other way, she aims left.
Yes. Yeah.
And so she's trying to steer the debate. And this is at a time when the liberal wing of the Democrat caucus is being asked to make the bulk of the concessions on this bill. And they are obviously feeling aggrieved and left at the altar by the Biden administration, and the White House has to give them something. This is a relatively lost thing for them to get.
It's an interesting point because you're absolutely right. I mean, Warren is doing her thing, but it's also a very coordinated effort with some of the interest groups and others that support her. I've watched my own past, as you guys know, is with Senator Dodd. Dodd Frank came out in support for Powell to be renominated, which is no small signal. Dodd is very close to Biden. It doesn't carry the same weight it probably did when they were in office, but carries a lot, and sort of viciously attacked by a number of progressive interest groups. And, Powell is feeling that. And despite the at least reported remarks that Yellen is in support and others, it seems like this is going to be a fight. And I am curious, from what I hear on the Hill, Powell could get a number of Republican votes. And so there is probably the 60 votes to get him there. I don't think that is a question on the table, but I think it is this issue that you raised of progressives may take a couple losses here. Biden seems to try to make that up for them in his executive picks. You see this with the new OCC nominee as well, that may have a very tough time getting through the Senate. But I'd like to hear more kind of the rest of the makeup. How does he build out the whole Fed beyond Powell? The bully pulpit probably helps him a little bit in Dallas and Boston, but he also has this chair of supervision and others to fill. What do you guys expect on that front?
Well, it's a little ironic because Powell is a Republican who's kind of over the course of the pandemic turned into an incredibly huge dove.
Yeah.
So it's a lot easier for a Republican to drag along other hawks to have his dovish views than for a Democratic dove to drag them along. While I do think Brainerd's going to be the one that gets it, I think she's going to have a harder time actually leading than Powell would. But the Boston Fed and the Dallas Fed, each federal regional bank it's its own entity, and the board would appoint it. Obviously, the president can influence who it should, but Kaplan would be described as a hawk. He's not going to be replaced by a crazy dove, but he could be replaced by someone that's a little more dovish. And Rosengren would be described as, I suppose, a hawkish dove. The Boston Fed would always be a little more, I suppose, progressive in their views. So just at a minimum, you're probably going to replace, and these two guys, these two seats actually vote next year on the FOMC. Okay. So you will have probably a moderately more dovish voices voting next year than you would have had these two stayed.
Yeah, and on the among the governors, so the Biden administration has as we've already talked about the chair, but certainly the vice chair position is coming open. The vice chair for supervision is front and center.
That's a big one. Yeah, Gensler's gone, and that's who's in charge of regulating the banks and all the Dodd-Frank that you guys wrote. So, definitely, I don't think Dodd-Frank has actually worked quite well. And really, Senator Warren's the only person that's kind of mad at banks lately. The banks did actually fairly well throughout this pandemic. But you will, at the margin, have a little more tight supervision of the banks.
Yeah.
The only issue is they've actually already kind of written all the rules that Dodd-Frank required them to. So, you're kind of moving the marker, 5 yards. The big decisions have already been made and written.
And humor me, guys. You're obviously closer to this, but is there a deal in all of these seats? Right? Is there a more progressive vice chair, a more progressive vice chair of supervision that Biden can put in there and package with Powell's renomination, or knowing your call on Brainerd, but is that just not going to fly?
Well, I mean, the consensus is that Powell is renominated and Brainerd is put in as the vice chair of supervision, and that would be a very moderate kind of compromise, and would certainly give the liberal wing of the party a little something, but we think that right now the gravitational pull is toward a little bit more bold strokes in this, and there are certainly other candidates that are. I mean, it's not necessarily even about views entirely, dovish versus non. Right. It's about different perspectives. It's about diversity.
Diversity is a big issue.
Yeah. And so this is an opportunity to remake the board in a way that is, brings a variety of different perspectives. And so that I think is going to be a really paramount consideration here.
But I suppose I throw
Brainerd
it back to
does
you.
Sorry, Brendan.
I'll throw it back to you because if Powell got renominated, he would be passed with a significant amount of Republican votes and a significant amount of Democrats that voted against him. Brainerd would be appointed much more along party lines. So from a political perspective, how does that look to the Biden administration to essentially appoint a Republican the Republicans like?
That's sort of where my concern, maybe too strong of a word, but is, if we think about this over the next couple months, and I don't know exactly when it will happen, but we're in a prolonged debt ceiling fight. We're still in the middle of a COVID crisis, and we've got, good news coming that there's no, this Merck deal and others. So who knows where we'll be, but there's still inflation risk. There's still other risks. And now you have to fight for weeks on Brainerd with probably pretty ugly banking committee hearings and then some, a pretty tight floor vote where just like we're seeing now, right? Weeks of back and forth. And do we have enough votes? Do they want to do that to markets in a pretty kind of choppy water scenario anyway? I don't know. I personally lean a little bit more towards Powell. Maybe it's a little bit of wishful thinking that, as John said, Brainerd gets number 2. Wouldn't shock me if she gets a little wink and a nod too, that she's the heir apparent to Yellen, as been rumored for a while. And so take this seat and then we'll grab that other seat. And does that placate Warren? I
suppose maybe. The other part that you have to keep in mind also is that the Biden administration hasn't appointed any of their
none.
Like every department has a head and everything else is empty. It's been fairly incompetent on their side. The Treasury doesn't have any senior officials.
Oh, right. No, they have the Undersecretary of Domestic Finance, the first confirmed Undersecretary of Domestic Finance in like ages, Nellie Liang.
Right.
But the International Affairs is still vacant. And there are a lot of vacancies there. That is true.
Yeah. But that goes both ways. I mean, progressives waited a while on some of these other picks. We just got, not we, but they just, Chopra was just nominated. I'm sorry, not nominated, but passed, cleared yesterday. You now have this OCC nominee that I mentioned that I think is going to be a very tough fight. I think this may resemble what we saw with Mira Tandon, right? Like this may be, I hate to call it like smoke and mirrors, but I do think Biden may not go all the way through with this one. Just given the fight that I hear is coming. Again, I'm still a little bit leaning towards that there is some package of governors and nominees that they can give Warren, but maybe still want to take the victory with, as you were saying, Brendan, I think Powell, I haven't vote counted, but I'm guessing 70 plus votes. I think.
Really, the sense would be on the Democratic side, not on the Republican side.
Exactly. But even then, I don't think Warren has, it's certainly not all the Democrats, right? I think you'd get a large group of them.
No, you would get a large. That's what I'm saying. Yeah. But Brainerd you'd have to fight for.
Brainerd, you're looking 50-50. Yeah.
It'd be 50-50.
Yeah. Well, great. More to come on that, I guess, this week. In the weeks ahead. But let's take another quick break and we'll come back and Brendan, we can take a little bit of a look ahead into next week.
Check out HPS Insights, a regular podcast from Hamilton Place Strategies, bringing you the latest on policy debates affecting the business and political communities. Available on the HPS podcast channel on your favorite streaming platforms, including Apple, Spotify, and Google. Tune in to the latest episodes and learn more at hamiltonplacestrategies.com/podcast.
We're back with the HPS Macrocast. Brendan and John want to look ahead to next week, but just quickly, literally kind of overnight and while we're recording this, big news from Merck about a new at-home drug that is reportedly cut hospital visits on COVID by 50%. Looks like we may have, a pretty significant development here. I assume still weeks and maybe even months away before this actually gets to people, but seems like good news on the COVID front. And
and actually not just the COVID front, but actually on the flu front. This drug basically tricks it doesn't really matter about variants because at the initial stage, it just tricks it from reproducing. So this can also work on just the regular flu. So this is a big deal. And kind of going back to monetary policy and the economy, we've seen a huge amount of companies put out warnings now that taking down guidance because of supply chain issues and also, hiring people. Everyone from Procter & Gamble to Disney World. Disney actually wasn't able to even make TV shows and movies because of what's going on. So this is also seeped into the monetary policy world where while the most Fed governors, but also ECB governors globally, view this inflation as transitory, they're getting a little more worried that it's going to last longer than they had envisioned. So if we can have this drug that, basically guarantees you're not going to die, hopefully, knock on wood, we can reopen and get back to the office a lot quicker than we now had envisioned, because the Moderna CEO last week said basically we'll be done with this pandemic in a year, which is still a long way away.
Still a long time, and I heard that last year. So
where we thought we were supposed to be done with it in July.
Right. Well, good news.
This is great news, but it also has economic and monetary policy implications. Well, I mean, it certainly seems like this is true.
Yeah, that's great. Brendan, what do we have to look forward to next week?
So next week is the non-farm payroll, which is a really big deal, obviously. Interesting, the St. Louis Fed, they have each bank has their own economics group, and they have a group that's been tracking, the jobs hiring using, real-time data, especially, we have a number of hiring firms. And they put out a warning today that they think that the September number could be deeply negative, like as negative as much as their model's spitting out 800,000 jobs lost entirely because of Delta. We've actually kind of always thought that the Fed was going to hold off on the taper until December because we thought that the September jobs number was going to be a disappointment. So, I mean, we'll find out next week, but there is that worry. And I don't know, if you just kind of walk around town, the smell test actually kind of supports that thesis.
Oh, absolutely. I feel like we had more activity in July than we did in, September for sure.
Yeah, I went to
the office around town. Yeah,
I went to the office to pick up mail on, I think it was Tuesday, and I mean downtown is just dead. There's just no one there. But then also politically importantly, OPEC has a meeting, and it kind of went below the radar, but I'll let John talk a little bit. But we sent Sully to Saudi Arabia, I know.
Right? I've got on my list here, OPEC, China. There's so much this week that we didn't get to, but John, love to hear your thoughts.
Yeah, obviously the Biden administration has a pretty frosty relationship with Saudi Arabia and on the human rights front, and obviously the lurid case of the journalist, of the murder of the journalist that we're all aware of. This has kept level of the conversation with Saudi kind of at a minimum, pretty frosty, as I said. But Jake Sullivan, a national security advisor over there, meeting with the Crown Prince. With a pretty high level delegation, ostensibly talking about Yemen and human rights and that sort of thing. One would assume that something else on the agenda was oil supply. I mean, they have obviously, the Biden administration already put out that public letter exhorting OPEC to pump more. This meeting is, as Brendan said, it's on Monday. And if OPEC comes out in the current situation with shortages, energy shortages around the world, it would be it would be a great opportunity for OPEC to come out and increase the pace of their supply curb roll off as a gesture of a goodwill concession, perhaps to the Biden administration from the Saudis, and just to try to alleviate some of the pressure that we're seeing around the world. If they don't, boy, that would be a pretty challenging position, I think, for the Biden administration to lay upon.
Yeah, absolutely. We could talk about that a lot longer and others, but I know we're coming up on time. So thank you guys for tolerating me again as a guest host. Hopefully I filled Tony's shoes admirably, but thanks for everyone too. Thanks for everyone for listening to the HPS Macrocast. Bryan DeAngelis here with Hamilton Place Strategies, as always, with our good friends John Fagan and Brendan Walsh, Markets Policy Partners.
Massachusetts guys, go Red Sox! Go Red Sox!
Big weekend for New England.
Going tonight. A must win.
They're trying to save the season.
Yes. Right. No, we're not even going to mention that Sunday game, but we'll get there. Thanks everyone for listening, and we'll see you next week.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.